Most of us have a checking and a savings account, but I doubt any of you think about the impact banking has on your finances. Having some comprehension on how banks work can actually save you some money. Today's episode is going to be about banking basics. We're going to learn some fundamentals on how banks work. So let's jump on in. Should I choose a bank or a credit union? When it comes to choosing a bank or a credit union, you have a few options out there. Banks are controlled by investors, so they're in for profit. Credit unions, on the other hand, are owned and controlled by customers who are members. And also, credit unions are non-profit, so they're able to give you better rates on loans, better rates on CDs, and most of their services are free or very low cost compared to a traditional bank. Also, when choosing a bank or a credit union, you want to think about convenience and cost, right? Convenience and cost. How easy is it for me to access money, transfer money, deposit money, etc.? And how much does it cost to be a member of your bank or credit union? The choice is totally yours, whether you choose a bank or a credit union. But one thing you need to think about is convenience and cost. Online banking just allows you to manage your money online, right? You can review your transactions, transfer money, print checks, and pay bills online. Online savings accounts are really attractive because there isn't a branch building to maintain, and they have much lower staff costs compared to a regular bank. So they're able to give you higher rates on CDs, loans, things of that nature. The convenience and the rates are a few reasons why a lot of people are attracted to online banking. Banking costs and fees. Banks charge many different fees. Some of them are hidden, and you might not realize what the real costs are. There are minimum balance fees, ATM fees, overdraft fees, etc. Some of you manage your money very well and rarely get charged any fees, but you need to think about opportunity costs. For example, the balance that you maintain in your checkings account to avoid a fee, right? The minimum balance fee. You could be making that fee if your money was invested in a money market or a different type of investment vehicle. Opportunity costs. What does it cost me to keep this money here? Can I make more interest elsewhere, right? So you trying to keep this checkings account from hitting these minimum balance fees, you can easily say, hey, the hell with this. I'm gonna put my money somewhere else, like an online savings account where I get a higher yield, or online checkings account, right? You get higher yield, you have your debit card, although it might be harder to move money, but you're getting higher return. Overdraft protection is a feature that protects you from overdrawing your account. Some banks or credit unions allow you to cover your overdraft automatically through your savings account, through your money market account, or a credit card. Fees for overdraft are usually between $20 and $35. Overdraft fees are one of the reasons why families, U.S. households can't really maximize their income, right? Because we're always getting hit with overdraft fees, or we're not simply enabling that feature. Here's a stat that you might think is interesting. All U.S. banks put together make about $15 billion a year in overdraft fees and NSF fees. But about 80% of that $15 billion would be about $12 billion is coming from 9% of all U.S. banking customers. So if you think about it, $15 billion a year going to these banks and credit unions because of a fee. $1 billion is 999 families you can give $1 million to. Think about the impact of society, of us, US as a whole, if we can keep that money, right? Avoid those overdraft fees. Month to month, it seems like nothing, but over the course of 2, 3 years, 4 years, or in the bank's case, yearly, that is a lot of money we're giving away in fees. A lot of money we're giving away in fees.